Hey everyone, in this video I wanted to answer which one is the better stock to buy, ChargePoint or Workhorse Group. To answer that question, I'm going to compare these two growth stocks on revenue, on cash flow, on the balance sheet, and on valuation. So let's jump right in, starting with revenue. And looking at this metric, you can see ChargePoint has experienced better progress ramping up revenue, jumping to 150 million in the most recent quarter. Meanwhile, Workhorse Group is slower to ramp up revenue. However, I will say that the truck manufacturer and seller has launched several new models during the second and between the second and third quarter, and will start to experience an increase in sales as a result of those new models entering the market. Now, it remains to be seen just how much of a boost the company will generate in sales. Now, the alternative fuel is being encouraged by governments to shift diesel fuel engine trucks to the alternative fuel engine trucks, but the cost of ownership is still strongly in favor of diesel engines, and that's where Workhorse Group is going to have to manage that difficulty, manage that gap, the overall cost of ownership, to encourage businesses to switch over to its new technology. ChargePoint Holdings, meanwhile, is experiencing an increase in demand as a result of the massive need for more charging stations worldwide. We need a multitude more of charging stations worldwide if we're going to switch over to electric vehicles. That being said, while the overall industry is experiencing a big tailwind, doesn't necessarily mean that ChargePoint is going to be a winner in that industry. It could be that Tesla takes up so much market share in the charging stations that there's little left for other companies to capitalize on. So those are the longer term trends to keep an eye on for each of these two innovative growth companies. So the next thing I wanted to look at is cash flow from operations. And according to this metric, Workhorse Group lost 33 million in cash flow from operations in the most recent quarter, while ChargePoint lost 86 million in cash flow from operations. And the comparison is even more drastic if we look at in relation to revenue. ChargePoint generated 150 million in revenue, but lost 86 million in cash flow from operations, so less than what revenue it generated. Meanwhile, Workhorse Group negative 33 million, while it generated only 3.96 million in revenue, highlighting that the company is still not in the ramped up stage of manufacturing and sales and output, because it's still investing in research and development, in getting production off the ground, in getting sales off the ground to generate those sales, which have not yet materialized, but it's soon to be coming as a result of those new models being launched into the market. So that's something to keep an eye out for with Workhorse. So with so much cash negative for both of these companies every quarter, I wanted to see how much cash they had on the balance sheet. And ChargePoint has 233 million in cash on the balance sheet, while Workhorse has 62 million in cash on the balance sheet. But still, it's important to compare this number, not just look at it on face value. So let's compare with how much they lost in the most recent quarter. And Workhorse at negative 33 million compared with cash of 62 million. Looks like they have about 2 quarters worth of cash on hand, while ChargePoint lost 86 million and they have cash of 233 million. Looks like they have roughly 3 quarters of cash on hand. Each of these companies looks like they're going to need to go back to the capital markets, either borrow money or sell more stock to raise cash, because it doesn't look like they're anywhere near the point where they can self-sustain the business. So this is an interesting catalyst to keep an eye out on as well. And finally, I wanted to look at valuation, and I chose to use the forward price to sales. And ChargePoint is selling at nearly 5 times the valuation of Workhorse at a forward price to sales of 2.058 compared to Workhorse at a forward price to sales of 0.416. So if I had to pick one of these two, I would go with ChargePoint because of its more proven ability to ramp up sales. It's already generating significant amount of sales, and it's already established industry-wide as one of the major players in a rapidly growing industry. Meanwhile, Workhorse Group still trying to get itself off the ground in terms of sales, and I'm still concerned about the cost differences between its innovative technology versus the diesel engine and how they're going to close that gap, especially if or when government incentives go away. So for those reasons, if I had to pick one of these two, I would pick ChargePoint stock today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.